Assalamualaikum and good day to you, Dr. Hazila. I am Afan, representing Group 1 from Set 9. So basically, all four of us will present on the financial analysis for the group assignment, where we will be assessing Khind Holdings Berhad versus Pensonic Holding Berhad. Both of the companies are main players for home appliances in Malaysia. The agenda for our presentation on this assignment, basically we'll start off with myself presenting the introduction and background of the companies, and then followed up with the first two of the financial analysis, which is the liquidity ratios and the asset management ratio. And then Khairul will follow up next with the debt management ratios, profitability ratios, and then back to me on the DuPont method, as well as the overall financial statement comparisons. And then finally, the presentation will conclude with the 5-year market price analysis, low average and highest price, and also the overall conclusion by Asfar and Isni. We start off on about the background of both companies. First off is Khind, where they were established in 1961 in Selangor. They were an electrical appliances repair shop known as Khind Industries. They were listed in KLSE since 1998. Their founder is Mr. Cheng King Fa, who recently retired in 2019. They are managed currently by Mr. Adil Jimmy Mistry. Their known brands are Khind themselves, Mistral and Meyer. Basically reported in annual reports 2022, their revenue are up to 560 million ringgit and their assets are listed in about 346 million ringgit. Moving on to Pensonic, they were established in 1965 in Penang, known before as Electrical Appliances Trading Shop under the name Kiat Radio and Electrical Company. They were also primarily known as first nation brand to manufacture electrical home appliances. They were listed in KLSE since 1995. The founder is Datuk Sri Chew Weng Kak, and the group is managed by Mr. Dixon Chew Chuan Jin. Their known brands are particularly Pensonic, Cornell, Leban Steel Collection, Touch, and also Murphy Richards. Their recent revenue reported in annual report 2022 were basically 325 million ringgit, and their assets are listed as 315 million ringgit. Okay, we start off with liquidity ratio, where we will assess the current ratio and quick ratio for both companies. It can be seen clearly both companies have had increasing trend from 2020 to 2022. So basically you can see Khind had stronger liquidity ratio or current ratio given in their each of annual reports. And in terms of quick ratio, you can see a significant drop as well for Khind, because they might have the less liquid items to convert into cash. Therefore, the quick ratio looks less than their current ratio, of course, because they are minus the inventories. Similarly, go to Pensonic Holdings, you can see their current ratio and quick ratio have significant difference, and it more applicable to Pensonic. You can see they have a lot more less liquid items. The first part of the asset management ratio, which is the inventory turnover ratio, can be seen clearly where Pensonic started off 2020 with a very good inventory turnover of 5.2399 compared to Pensonic reported as 3.9476. But as you can see the trend, the Pensonic trend are more declining compared to Khind Holdings, where they were more steady or stabilized themselves in terms of the inventory management. But in all, if you consider both data, so basically both companies are about the same performance in terms of inventory turnover ratio. Moving to the day sales outstanding ratio, you can see clearly Khind and Pensonic started off 2020 at par for about 16 days and 17 days respectively for Pensonic and Khind. But in 2021, both make improvement a lot, where Khind reported 3.5 days and Pensonic about 4.5 days in terms of collecting their receivables. But moving into 2022, Khind still retain a bit better compared to Pensonic, where they have about triple the collecting days of receivables. So in terms of this ratio, Khind is better. The TAT ratio, or total assets turnover ratio, reported by both companies from all the 3 years, reporting Khind as increasing trend compared to Pensonic, where they have a bit of fluctuated trend. But both of the companies reported the total asset turnover ratios above 1. So basically, they are reporting their ability to generate more revenue per dollar of assets, and you can see the operational efficiencies of Khind are much better than Pensonic. The fixed assets turnover ratio reported by both companies are both positive and increasing trend, but you can see clearly the gap difference between Khind and Pensonic. You can see clearly efficiencies of Khind in utilizing their fixed assets to generate revenues, like using their machines to generate output. And this also indicate their aggressiveness in continuous improvement activities in order to increase the efficiencies in their operations, and they might have made several strategic investment decisions, for example, disposing of the land compared to Pensonic. Now I will move to Khairul for the debt management ratio presentation.
Let's talk about debt management ratios. Debt to asset ratios is a financial metric that measures the proportion of a company's assets that are financed by debts. For Khind Holdings, debt assets ratio of 25.7% in 2020, slightly increasing to 26.4% in 2021, and further decreasing to 20.7% in 2022, suggests a reduction in the proportion of debts in its capital structure. This could be a positive sign as it indicates potential lower financial risks. For Pensonic Holdings, debt assets ratio of 36.32% in 2020, slightly decreasing to 29.16% in 2021, and then slightly increasing to 35.38% in 2022, suggests that the debt asset ratios have been somewhat stable, with a slight increase in 2022. This suggests a consistent reliance on debt financing. Comparing both companies, Khind has consistently maintained a lower debt to asset ratios compared to Pensonic, indicating a relatively lower reliance on debts for financing its assets. The decreasing trend in Khind's ratio suggests that a deliberate effort to reduce debt levels or shift towards other forms of financing. Debt to equity ratio is a financial metric that assesses a company's financial leverage by comparing its total debt to its shareholders' equity. Khind Holdings' debt to equity ratio is fairly stable and experienced a dip in 2022 to 0.3. Its equity and debt levels remain somewhat constant from years 2020 to 2022, indicating no major capex investments and surge in borrowings for short-term facilities, which is a good indication for a mature company. For Pensonic Holdings, its debt to equity ratio is constantly close to 1, indicating a higher reliance on debts to finance its operations compared to Khind's holding. It means that the company is relying more on debt to finance its operations. However, sizable operations bring some comfort as larger, more established companies may be better positioned to handle higher levels of debt compared to smaller growing companies. In comparing the two companies, Khind demonstrated better management debt to equity ratio by maintaining a stable ratio of 0.5 and lowering it further to 0.3 in 2022, while Pensonic has a higher reliance on debt to finance its operation compared to Khind. Market debt ratio is a financial metric that measures the proportion of a company's market value that is represented by its total debts. Khind Holdings' market debt ratio is at 0.3433 in 2020, 0.3472 in 2021, and decreased to 0.2582 in 2022, indicating a lower proportion of market value attributed to debt. This could be due to changes in the company's capital structure or market holdings. For Pensonic Holdings, market debt ratio of 0.4418 in 2020, 0.3872 in 2021 and further increase in 2022, suggesting a higher proportional market value attributed to debt. Both companies, in comparison, both companies have market debts below of 0.5, indicating a balanced capital structure with higher contribution from equity. Pensonic Holdings consistently has a slightly higher market debt ratio compared to Khind Holdings, indicating a relatively higher reliance on debt financing. The liabilities to assets ratio is a financial metric that provides insights into a company's capital structure and financial risk by comparing its total liabilities to its total assets. For Khind maintained a relatively consistent liabilities to assets ratio around 0.51 in 2021, followed by a decrease to 0.4 in 2022. This suggests a shift towards a more conservative capital structure with a lower reliance on debt financing. For Pensonic Holdings also maintained a consistent liabilities to assets ratio around 0.54 over 3 years. This indicates a relatively stable capital structure with a consistent reliance on debt financing. For comparison for both companies, Khind appears to be moving towards a more conservative capital structure, while Pensonic Holdings maintains a stable but slightly increasing level of financial leverage. Equity multiplier is a financial metric used in managerial finance to assess the financial leverage of a company. It is also known as the leverage ratio. For Khind Holdings, it has decreased from 2.0343 in 2020 to 1.6824 in 2022. A declining equity multiplier usually suggests that the company is relying less on debt to finance its assets relative to equity. This can be seen as a positive sign, indicating lower financial leverage and potentially lower financial risk. For Pensonic, however, it has increased from 2.1787 in 2020 to 2.2177 in 2022. An increasing equity multiplier indicates that Pensonic Holdings is using more debt to finance its assets relative to equity. In comparison for both companies, Khind Holdings has a declining trend in equity multiplier, indicating a shift towards a more equity-based financing structure and potentially lower financial risk. Pensonic Holdings has an increasing trend in equity multiplier, suggesting a higher reliance on debt and potentially higher financial risk. For interest coverage ratio, assesses company's ability to meet its interest payments on outstanding debt. For Khind, a ratio of 10.82 in 2020 indicates that Khind has a substantial margin of safety in covering its interest expense in 2020. This is quite a healthy level. In 2021, the ratio decreased slightly, but still at a comfortable level, and 2022, it still decreased. While a ratio of 5.71 is still reasonably good, the decline may warrant attention, so Khind has to focus on controlling its debt levels. For Pensonic, a ratio of 0.73 in 2020, 5.24 in 2021, and still lowering in 2022. I think there is a need for Pensonic to look into its debts and monitor the trend and understand how it's contributing to their financing. In comparing both companies have shown variations in their debt to interest coverage ratio, while Khind Holdings maintain relatively high ratios. Pensonic Holdings experienced improvements from a low base to 2020, but should be monitored for continual financial stability. And now we're going to look at the profitability ratios analysis. The first ratio that we're going to look at is the net profit margin. The net profit margin is a key financial metric that provides insights into a company's profitability. It is calculated by dividing net profit by total revenue and is expressed as a percentage. For Khind Holdings in 2020, a net profit margin of 5.85% indicate that Khind Holdings retained $5.85 in profit for every $100 in revenue generated. This margin suggests a reasonable level of profitability, allowing the company to cover operating expenses and still have a net profit. In 2021, it decreased to 4.56%. This suggests a potential decline in profitability and most probably in terms of cost of raw materials and operations as we move on out of the pandemic and prices of raw materials begins to shoot up. This further decreased to 3.55% in 2022, indicating higher cost of operations. For Pensonic, Pensonic has a relatively low net profit margin of 1.26% in 2020. This indicates that Pensonic Holdings retained 1.26 ringgit in profit for every 100 ringgit in revenue. There is a significant improvement to 4.51% in 2021, showing that Pensonic has embarked on successful efforts in enhancing profitability. It again increased to 4.66% in 2022, indicating better performance. In comparison of for both companies, Khind Holdings consistently maintain higher net profit margins compared to Pensonic. This might suggest that Khind was initially more efficient in converting revenue into profit. The declining trend in Khind's net profit margins is a concern though, and it warrants a thorough analysis to understand and address the underlying issues. Pensonic demonstrated a significant improvement in net profit margin from 2020 to 2021, indicating successful measures to enhance profitability. The operating profit margin is a financial metric that represents the percentage of revenue a company retains as an operating profit after covering operating expenses. Khind Holdings' operating profit in 2020 is 7.6%, 5.6% in 2021, and further decreased to 3.82% in 2022. Khind started with a relatively higher operating profit margin, indicating efficiency in managing operating costs. However, declines in 2022 suggest challenges in maintaining this efficiency. It is possibly due to increased operating expenses or changes in the competitive landscape. For Pensonic Holdings, profit margin of 1.1% in 2020 increased to 5% in 2021, and then slightly decreased to 4.56% in 2022. Lower profit margin in 2020 compared to Khind, but showed improvements in 2021 with a slight decrease in 2022, which could be due to normal fluctuations or may signal the need for further analysis into operating cost structures. Comparing the two, Khind consistently had a higher operating profit margin compared to Pensonic. This suggests that Khind was more efficient in managing its operating costs and generating profit from its core business operations. Both companies experienced fluctuation in operating profit margin over the 3 years. A declining trend, as in Khind's case, may raise concerns about operational efficiency, while an increasing trend in Pensonic's case suggests improvements. Gross profit margin is a financial metric that measures the percentage of revenue that exceeds the cost of goods sold. It indicates that the company is able to retain a larger portion of revenue after covering the costs associated with producing goods and services. For Khind, gross profit margin of 32.31% in 2020, which remains relatively stable at 32.11% in 2021, and decreased to 26.79% in 2022. Khind started with a relatively high gross profit margin, indicating a good ability to cover production costs and generate profit. However, the decline in 2022 suggests challenges in maintaining profitability, possibly due to increased production costs or change in pricing strategies. For Pensonic, gross profit margin of 16.56% in 2020 increased to 20.08% in 2021 and then slightly decreasing to 18.32% in 2022. Pensonic had a lower gross profit margin in 2020 compared to Khind, but showed improvement in 2021. The slight decrease in 2022 may be a normal fluctuation or may signal the need for further analysis into cost structures or pricing strategy. Comparing the two companies, Khind consistently had a higher gross profit margin compared to Pensonic. This suggests that Khind was more effective in retaining a larger portion of revenue after covering production costs. Both companies experienced fluctuations. A declining trend in Khind's case may raise concerns about profitability, while an increasing trend in Pensonic's case suggests improvements in cost management or pricing. Basic earning power is a financial metrics that measures a company's operational efficiency by measuring its ability to generate operating profits from its assets. For Khind, shows a decline to 8.92 in 2021 and further decreased to 6.17 in 2022. The declining trend in Khind's margins raised concerns about the company's profitability and its ability to maintain operational efficiency and generate profit from its core business operations. For Pensonic, started with a margin of 1.2% in 2020, increased to 6.11% in 2021, and then slightly decreased to 4.7% in 2022, showed an improvement in operating profit margin, in operating basic earning power from 20 to 21, but the decrease to 2022 suggests the need for further analysis into its operating cost structures and efficiency. In comparison for both companies, Khind performed better in these metrics. Historically, it has been more efficient in managing operating costs and generating profit from its core business operations. Both companies experience fluctuations, however. What raises concerns is Khind's declining trend is more significant, indicating potential challenges in maintaining operational efficiency. Let's take a look at return on assets. Return on assets is a financial ratio that measures a company's efficiency in utilizing its assets to generate earnings. Khind generated a return of 9% on its average total assets in 2020. This suggests that for every dollar of assets, the company earned 9 cents in profit. The ROA decreased to 7% in 2021 and declined to 5.1% in 2022. And this suggests ongoing challenges in maximizing returns on assets for Khind Holdings. For Pensonic, the return on assets for Pensonic in 2020 was relatively low at 1.12%. It increased to 5.62% in 2021 and remained somewhat stable at 4.55% in 2022. While not as high as the peak in 2021, this still indicates a reasonable efficiency in generating returns to assets. Comparison for both companies, Khind consistently had higher ROA compared to Pensonic. This suggests that historically, Khind has been more efficient in utilizing its assets to generate profits. Pensonic's significant improvement in ROA from 20 to 21 suggests successful measures to enhance operational efficiency. For return on equity, these ratios indicate the company's ability to generate profits from shareholders' equity. For Khind, ROE of 18.2% in 2020, declining to 14% in 2021, and a further decline to 8.5% in 2022. This declining trend in ROE suggests a decreasing ability to generate profits from shareholders' equity. This may be attributed to factors such as increased expenses, decreased profitability, or changes in the capital structure. For Pensonic, ROE of 2.47 in 2020, improving to 12.3% in 2021, and a little bit of decrease to 10.10% in 2022. Pensonic showed a substantial improvement in ROE from 2020 to 2021, indicating successful efforts to enhance the company's profitability and efficiency in using equity. Comparison for both companies, Khind initially had a higher ROE compared to Pensonic, but experienced a more pronounced decline. This indicates a more significant challenge in maintaining shareholder value for Khind compared to Pensonic. Both companies experienced changes in their ROE over the years, underscoring the importance of identifying and addressing the factors that influence these trends.
The DuPont method that we conducted here for both Khind and Pensonic across the 3 years between 2020 and 2022, as you can see, the return on equity for Khind is reducing, but on the other hand, for Pensonic, it is increasing. So what drives the elements within the DuPont method? Of course, the three elements within the return of on equity, which is, you can see, the equity multiplier. For Khind, it is reducing, and for Pensonic, it is increasing. So that means Pensonic are using more debts to conduct their financial leverage. As an overall summary of our financial analysis conducted between Khind and Pensonic across 3 years, 2020 to 2022, we can conclude that both companies approaches differently in terms of how they would like to secure their financial position. We look into liquidity ratio, asset management ratio, debt management ratio, profitability ratio, and DuPont analysis that we've conducted. Especially on the liquidity, we can see that Khind had higher and better ratio significantly in terms of how they are able and in a better position to meet their short-term financial obligations compared to Pensonic. On the asset management ratio, we can see that Khind performs better in using their assets efficiently in order to generate more revenues. And in DuPont LLC that we've conducted, we can see that both companies are having their financial leverages in order to drive their return on equity. But you can see the effect of asset management or asset turnover conducted by Khind produce a better result for them. Although you can see the declining trend for Khind between the 3 years. Compared with Pensonic, where you can see the asset turnover are more fluctuated, but still they maintain their financial leverage. Therefore, debts are driving their return on equity for Pensonic. In conclusion, the overall summary of financial analysis that we've conducted between Khind and Pensonic across 3 years between 2020 to 2022 are based on their financial statements. Of course, the balance sheet and the statement of comprehensive incomes. And overall performance assessment are based on these three factors. The first one is revenue generation, second is the profitability margin, and third is the earnings per share. We can see clearly on the revenue generation, Khind recorded much better results where they've recorded 560 million ringgit compared to Pensonic recorded 326 million ringgit. These are based on the results on the revenue advantage had by Khind, where they had stronger market presence, diverse products, and more appealing products. Of course, both companies exercise using the e-commerce platform during these times. This will be covered more later on in market price analysis by Asfar and Isni, where they covered about products, about marketing strategies, as well as the consumer behaviors. In the profitability margin section, superior efficiency with higher gross profit margin of 26.78 to 32.3% recorded higher than Pensonic, where they've recorded 16.55% to 20.10% in terms of higher gross profit margin. This indicates Khind's less reliance on debt in order to fund their operations compared to Pensonic, which results in the earnings per share section, where Khind reported significantly higher EPS figures compared to Pensonic, where they recorded between 43 ringgit to 71 ringgit between these 3 years, compared to Pensonic recorded between 2 ringgit to 11 ringgit between these years. So this indicates Khind had better profitability, of course, based on their operations where they relied less on debts, thus produce more profits. And this produce more effective distribution of earnings and more attractive investment for these shareholders with these increasing demands during these times. And overall performance assessment that we can conclude from these results are basically the results or decision that made by Khind where they less relied on the debt produced significant better results compared to Pensonic of all these 3 years, and thus we can conclude that Khind had superior financial ability and stability compared to Pensonic. I will pass over the discussion of this assessment for market price analysis of 5 years to Asfar and Isni. Thank you, Dr. Nur Hazila, for listening to my presentation.
Khind 5 years market share price show in year 2018 until 2019 the price stabilized at range 1.7 ringgit per share. Khind lowest market share price happened in December 2018 at price 1.48 ringgit per share. Khind managed to improve their market share price in year 2020 in October after Malaysia start restriction movement control due to COVID-19 in March. In 2021, Khind hits their highest market share price in September at 5.12 ringgit per share. Malaysia shifted from pandemic to endemic in April 2020, where during this year Khind market share price reduced at average value 3.03 ringgit but still higher 78% compared before pandemic stage. Khind market share price influenced by internal and external factors such as in year 2018, Khind struggled to compete with China product, high inflation rate and weak ringgit value. They have launched several new products such as multi-rice cooker and multi-air fryer. However, in September, government introduced SST causing Khind only managed to get average price market value at 1.8 ringgit in year 2018. Khind tried to improve their market share price in year 2019 by focusing on their marketing strategies. Several actions been taken by Khind such as collaborate with Shopee and Lazada and Khind appoint young leader for their e-commerce department. Khind also changed their marketing from independent trade outlet to modern trade outlet also known as MTO, where customers start to find Khind product at large retail chain, supermarkets, hypermarkets and department store. Khind aware about trade war between China and US in year 2018. Therefore, Khind managed to participate in Re-Export Business Opportunity Project also known as REPO, where this project focused in collaborating with China and European. However, in November, Khind founder Mr. Chen Qingfa retired causing investor lost trust in Khind and this affected Khind market share price. As a result, in year 2019, Khind market share price closed at 1.65 ringgit per share. Year 2022, pandemic stage start in March. To support local business, Malaysia government introduced moratorium to stimulate cash flow start in April. This factor causing customer focus on activity in-house, such as cooking with family. During this period, several new recipes been created by citizens such as Dalgona Coffee and many new cooking YouTubers appear such as Pavitra, which is a proof that during MCO, home appliance demand increased at Malaysia. Khind took this opportunity to strengthen their e-commerce platform by participating in Lazada 11/11 promotion. As a result, Khind successfully closed their market share price at 2.2 ringgit per share. Khind management aware about customer change behavior during pandemic and they would like to keep their market share price performance. Therefore, Khind strategically utilized data analysis as a base to set business strategies and establish new product category known as Major Domestic Appliance or MDA to focus on high online market demand. These strategies managed to increase Khind market share price at higher level where they closed their market share price at 4.16 ringgit. When endemic stage start in year 2022, consumer behavior change again. They no longer focus in indoor activity, Khind aware about the shifting and behavior. Therefore, to prevent their market price back to before pandemic level, Khind officially established Khind IQ where they focus on data-driven analysis system. Even Khind market share price dropped compared previous year by 37%, but still higher before pandemic strike. As summary, Khind market share price in year 2018 and 2019 are stable trend. However, start in year 2020 until 2022, Khind market share price was volatile due to pandemic and endemic stage that happened in Malaysia due to COVID-19.
Here, we will explain regarding Pensonic's market share price analysis over the span of 5 years in relation to Pensonic's internal strategies and external forces affecting the company's performance. Here is Pensonic's market price trend from 2018 to 2022. From 2018 to 19, the company's share price experienced a significant decline, dropping down from 61 cents when it started in 2018 and kept declining down to 33 cents in December 2019. The worst was yet to come for Pensonic, when 2020 was the year where the whole world struggled to battle COVID-19, and Malaysians were faced with a series of movement control orders by the government starting from March 2020. Impact from this lockdown, Pensonic's share market price hit the lowest value at 20 cents on March 2020. However, in 2021, the company's share price reached its highest point within this 5-year span by reaching 85 cents on March 6, 2021. Unfortunately, in 2022, the company's share price wasn't able to keep its momentum and continued to drop further as Malaysia shifts from pandemic into endemic phase and finally closed with a share price average of 54 cents, 2 cents lower than the 2018 average. Diving in more deeply to analyze the events revolving around Pensonic's market price, major events that contributed to the changes in Pensonic's market price are as follows. Just before 2018, in December 2017, Pensonic launched their e-commerce platform. However, these activities were still unable to help increase their market share price. From January to October, market price remains at a range of 60 cents despite the government introducing the tax holiday due to lack of impactful activities such as the reduction of rental cost and becoming the sole distributor for Morphy Richards and Belling. Their market share price started to decline even more steeply after the government introduced SST. In 2018, Pensonic aggressively introduced new product in this year. Pensonic also chose to sponsor several cooking TV shows as a marketing platforms to introduce their new products to customers. Despite all these activities, they were still unable to boost Panasonic's market price. In 2020, COVID-19 global outbreak happened, which marked the lowest price throughout the 5-year span at 20 cents. The government introduced a series of moratorium which really helped Pensonic to improve their revenue and market share price. Pensonic took consumer behavioral change as an advantage to introduce several new products and introduce 3 new strategies. Impact from this internal and external factor, Pensonic market share price average value in the year of 2020 reached 36 cents, which is 7.7% decrease from the previous year's average. In 2021, moratorium extensions by the government was able to boost the economy by giving the consumers more buying power, which translates to the higher sales volume and increased market price that reached the highest in March. The national immunization program that led to the relaxation of lockdown measures, which allowed the company to resume its business operations. However, the company proposed to share split of everyone existing ordinary shares into 2 ordinary shares, which was approved by the shareholders in September, caused the share price to decrease towards the end of the year. In 2022, the company had a lower profit margin due to the increase in raw material costs due to COVID-19 and also the Russia-Ukraine issue. The Malaysia government enforced extension of moratoriums and other activities that contributed to positive growth during the first half of the year. However, the pandemic phase shifted to endemic. Movement restrictions were being eased. Consumers finally can go out to their homes. This shift of consumer behavior gave the impact to Pensonic throughout the remaining of 2022, where Pensonic struggles to keep its momentum. To sustain Pensonic's market price, they introduced loyalty programs to attract consumers, but market share price kept declining. In summary, Pensonic's market price trend was already in a downward trend in 2018 and 19, struggling to find balance between keeping up with the competitors, reducing operation costs, and finding the new hit product line. In 2019, the fluctuations in share prices reflect not only the company's internal adjustments, but also its responses to external shocks like COVID-19 pandemic and geopolitical issues. Pensonic performance during this 5-year span peaked at 2021, however, failed to maintain the momentum in 2022 due to the increased material cost. With all the events in recent years, it can be said that the company's overall growth in terms of share price from start in 2018 to finish in 2022 remains stagnant at 54 cents. Khind and Pensonic are two Malaysian companies that focus on home appliance products, and based on 5-year market trend price analysis, we can see that the different sets of approach had been done by each company that produced different results, where Khind market share price performance was better than Pensonic's. These differences can be seen in these three areas.
First area is product. Khind focus on customer needs while Pensonic focus on consumer wants. Consumer needs to have one equipment that have multi-purpose function that value to their money and can solve their space consumption issue where they no longer need to buy rice cooker and steamer. They just need to buy multifunction rice cooker and they can cook the rice and steam the fish using same equipment. The color they choose for their new product also meet with the current trending color, which is pastel color.
Pensonic, on the other hand, decided to offer Batik series, where when they decided the concept, they did not properly study what their customers' interests, behavior, and how many percent today's consumer will be attracted with Batik concept. It can be concluded the lack of data, study, benchmark, poor analysis, and decision-making by Pensonic when they decided to choose this Batik concept. Therefore, it did not translate to better revenue for the company that was much needed.
If I ask you a question between Khind multi-air fryer pastel color
And Pensonic Batik with basic function, which one will you choose?
for me pastel color. Khind's marketing strategies focuses more on e-commerce platform. They are fully aware their customer nowadays engage with cyber world almost 24 hours. Therefore, Khind appoints young e-commerce leader to that their e-commerce department can function more effective. These strategies managed to produce fruitful results as when pandemic started, they immediately strengthened their e-commerce platform.
Meanwhile, Pensonic chose to sponsor TV cooking program as their new product marketing platform. Nowadays, consumer rarely buys the newspaper or watch the news on TV. Instead, consumers these days shift to online streaming platforms such as Netflix and Apple TV Plus. Based on Pensonic's results, again, it is clearly shows that they do not update on the latest marketing platform and do not obtain initial study before deciding marketing strategies for their company.
By the way, do you know who this chef?
Of course not. I'm not a fan of cooking programs though. You should know him because you watch cooking TV all the time.
I just know Chef One.
When was the last time you watched local TV program?
Can't remember, the kids watch cartoon at YouTube all the time.
Right.
From year 2018 until year 2022, customer behavior can be divided into three categories, which is before pandemic, during pandemic, and endemic stage. Before pandemic, Malaysian consumer perception toward local product is low quality and the price must be lower than international brand. Therefore, consumer only looking for local brand to purchase cheap product. After realizing these current scenarios, Khind try to differentiate their product by offering multifunctional products while keeping to low price. These strategies are working since Khind managed to keep their performance despite the huge competition from China brands and other internal factors.
However, Pensonic chose to release special edition products to attract their customers and offer higher price, even compare similar products with international brand. This causing Pensonic cover reduction of market shares from 2018 to 2019. We make comparison on 1.8 liter rice cooker between Khind, Pensonic, and international brand Panasonic, and found that Pensonic's Batik series is more expensive than the other two brands. That is why consumers chose Khind over Pensonic.
During pandemic stage, consumers' behavior change. Khind grabs this opportunity by enhancing their e-commerce sector and focus on data analysis of online marketing and demand by introducing MDA. As a result, Khind managed to break through their market share price over 5 ringgit.
Pensonic also managed to identify this opportunity and they released new product by introducing the e-loyalty program. Pensonic market share price also showed increasing trend and hit highest level. However, still could not break through to hit 1 ringgit per share.
Endemic stage consumer behavior change again. To prevent their market price share drop too much, Khind choose to take action and design strategies based on data driven. Therefore, in year 2022, Khind officially established Khind IQ to gather all information to optimize their profit. As a result, Khind share market price still dropped but no lower to level before pandemic.
Meanwhile, Pensonic still continued with their traditional marketing strategies by introducing Circle's loyalty apps. Here they had tried to attract potential consumers by offering rewards and promotions via online. Pensonic market share price showed reduction to the similar level with before pandemic.
Finally, as an overall conclusion for our managerial finance group assignment of financial analysis between Khind and Pensonic between 2020 and 2022, as well as the 5-year market price analysis conducted for Khind and Pensonic between 2018 and 2022, we can conclude that Khind had far more superior stability and ability in terms of their financial performances, due to the fact that first is basically Khind are more resilient and strategically adaptable during the situations of before pandemic, during pandemic and after pandemic. In addition, for this fact that Khind are better, basically we can witness that Khind uses the e-commerce or online platforms more better compared to Pensonic, where we can see their aggression towards their introduced products during this pandemics, which is the MDA, as well as introduction as Khind IQ as the brain in all consumer behaviors. This is very important in terms of how they would like to grow themselves in the future by understanding the behavior of consumers so that they can understand better on what products to be produced. This is a very strategic decision making conducted by King compared to what Pensonic has conducted, where they are being more nostalgic in terms of adding value towards customers in their products. But during the pandemic, we can witness that people are more looking towards what we can do and what we need to do compared to what we would like to do. So basically, that are the distinct difference between Kin and Pensonic in terms of product, in terms of marketing their products, as well as how they understand their customer behavior compared to Pensonic. In addition to that, we can witness during our presentation that Kin much more less reliant on that compared to Pensonic, where they rely a lot towards that in order to fund their operations. So we can conclude that in overall, Kin manages their financial conservatively but more aggressive and more current and also understanding better on the consumer behavior, marketing and products compared to Pensonic. So that concludes on our overall assignment, and we would like to thank you, Associate Professor Dr. Nur Hazila Muhammad Zain, for guiding us and teaching us as well as giving us knowledge and experience for us to understand managerial finance in order for us to proceed further in our MBA program in future. We would like to thank you for everything that you have given us and thank you for listening to us in this presentation. Assalamualaikum and good day.